Hello and welcome to the Diwali party at NDTV Profit. We thought that instead of trying to go out hunting for good food and good market advice, let's get good food and good market advice in our office. And therefore, Tamanna and me are hosting three very eminent fund managers today in our office over food, over gupshup, no alcohol, and some key Diwali advice. Tamanna, it's a great time to getting into the party mode.
Oh, 100%. And so we welcome Dinshaw, Harsha, Trideep. Thank you so much for joining us on the Diwali party. Now, we've been having all of those conversations. And by the way, there will be food, not just these empty plates. Food is coming. No, I promise you it is. But, you know, let's start with how the beginning of the festive season versus the festive season, or if I count this Diwali, the run up to it and now is starkly different in terms of mood. Wouldn't you agree? Dinshaw, let's start there.
Yeah, definitely. So basically the whole party started off with the Prime Minister announcing that massive cut in, not cut, he called it a Diwali gift by saying that we're going to rationalize GST, reduce it for the consumers. I think that was the real push that was needed on behalf of the government to push the consumer to come back into the markets. Unfortunately, that happened on 15th August and 22nd was when the real effect took place, right? So 1.5 months actually went away in this quarter. So maybe the quarterly numbers may not be that exciting, but look at the background to all this.
You're not excited by what you saw over the weekend?
Oh yeah, no, I'm very excited. That's what I'm saying. But the quarterly numbers I'm talking about. I'm talking about the earnings growth.
No, I'm talking about the earnings that were posted this weekend.
Oh yeah, so okay, you're talking about the banks bit?
Yeah.
So the positive surprise there was that the NIMs didn't compress as much as they were supposed to.
Okay.
I think that was, so it's like a, less of a negative that took away the, so I'm very excited about that also, by the way. But I'm saying, look at the background that was laid out before this announcement. RBI came in, the new government came in. The first incentive that he gave was through liquidity in the market, right? Then he started cutting interest rates. Government on their behalf also, and they kicked in by taking the slab of 7 lakhs to 12 lakhs. So the whole layout was done, the groundwork was laid out, and then the consumer needed a slight push. I think the GST cuts was the push they needed. So my feeling is that this quarter, the October to December quarter, when the real numbers will come out. This is when the earnings growth will start showing up, and that is what I'm excited about.
You know, the interesting piece, we were talking to Vijay Sales today, and he said things that are not getting sold are now starting to get sold. Suddenly dishwashers have come to the fore. 85-inch, 90-inch TV sales are, regular now. The 200 and the 300.
Vacuum cleaners. People are buying vacuum cleaners. I don't know who's going to be vacuuming, but they're buying vacuum cleaners.
So a lot of categories which are not thought of. Now, Harsha, the question is this push of consumption enough to drive the animal spirits in the market for the new Samvat, or do you reckon something more is needed?
See, I don't think all of the reforms have taken place already. For example, the monetary support that RBI has been providing is still not has still not run the full course, I would say. There could be one or maybe even two interest rate cuts over the next a few months, few quarters. That's there. And GST is not a one-time benefit, right? It's going to be lower prices from here on, which means even after the Diwali festive season, you are going to have wedding season, and most likely people will again come back and spend on consumer durables, two-wheelers, four-wheelers, all of this. So in a way, this is going to remain as a structural positive. Whether it will remain the same quarter over quarter, difficult to say, may not remain as strong as the festive season every other quarter. But I think going forward, you will definitely see better consumption numbers, especially on the discretionary side, over the next year and a half, I would say.
Dinshaw, the food is here. You can't blame us that we didn't give you. But yeah, please just serve everybody. Yeah.
Unlike my coffee, which I'm still waiting for.
Yeah, the coffee will come. You're brewing it fresh from the hills of Kunnur and getting it to you on Blinkit or Swiggy Instamart. As the
I don't
case.
think you're in a coffee mood, Dinshaw. That's why we've understood you're not. No, but Trideep, let me come to the part about how quickly the narrative also changes. For some reason now, which is good, Trump and what Trump is doing and 100% tariffs and all of that seems to have moved to the back of the mind. I'm not saying it's not an issue, but in terms of narrative, why do you see that happening?
So I think at the end of the day, if you look at September 24, just to put some time series behind it, we were the favorite market of the world.
Yeah.
Our market cap related to global GDP was at all-time high. From there, we are now at 2-year low, which means we have kind of bit our time where rest of the globe has been performing quite well while we have been away. The markets have been kind of flattish to marginally down, even though earnings have also been a little languishing. So in that context, having bitten over time where all of the markets are all-time high and we are nowhere near, or we were kind of slightly shy of that, with negative announcements coming from Trump coming on, a lot of steps which have taken by government tantamount to somewhere around 60 to 70 basis points of GDP, which is quite meaningful. And they all kind of have been hidden by the...
My question is the same. All of these steps 2 weeks ago were being ignored. FIIs are not looking at India. We've not been the most loved
Let me come to... so before these numbers came in, as you were saying, the festive sales, the initial data of auto that came about for the first few days and whatnot, all of this was hidden behind the negative news flow that we heard from United States. Now that the data has started to come through, the near-term data shows that there has been festival pickup with regards to consumer demand. It may be short-term, we will see over a period of time. And that's why with the data points coming in, which are real data points, some of those negative sentiments are kind of gradually easing away. The second thing which I've added is the recent numbers that have come about have not been disaster. So
are you saying the HDFCs, ICICIs of the world, XYZ are not disaster? I mean, markets are cheering them.
That's why they are cheering them, because overall with so much of negativity in the commentary which has been there in the air, the numbers show that even IT services, they were at par with what estimates were. So maybe the estimates were managed quite nicely, whichever way you put it. So, and that's why you see a bit of cheer in the markets, that net the earnings downgrade cycle that we have been seeing for the last year and a half could be finally basing out, and that's the big hope. That's the big Diwali hope.
Yeah, that's just a splash of a reality check, Niraj. Not disastrous. Are we in a market where not disastrous is good enough? Because, if you look at it on a bell curve, it's at least you've not failed. Is that how you see it, Harsha?
See, for the last 3-4 quarters, we have been seeing very muted set of expectations. On those muted set of expectations, this quarter up until now has been in line with expectation. That's what one can say. We still have half of the earnings season in front of us. But even if it were to disappoint, for example, I do not think that market is going to react so much, because as Dinshaw mentioned, there has been deferment of purchases, consumption during this quarter or previous quarter, for example. And that should play out in October to December quarter. So to that extent, I would say people are likely to ignore whatever numbers that come during the Q2 results, and probably will be hoping for a better Q3 versus Q2, as well as better Q3 vis-a-vis previous Q3. That's how I would see it.
Are people ignoring the numbers that have come right now, or are they cheering them on because they are not as disappointing as could have been?
No, what I meant is, even if the numbers were to come a little lower in the second half of the earnings season, I don't think market is going to negatively react for that.
So the mood has been, in that sense, reset. Dinshaw, I wanted to come to you on the part about the global horizon. Maybe one of the factors that's contributing to this, which we're not really seeing or taking into account, is how Trump has had to backpedal on China, and very visibly backpedal. I mean, this is taco trade at its best, isn't it?
So basically, China again, it's a huge behemoth, right, in the world economy. It cannot be ignored. And I think US probably thought initially that I can strong arm my way in and make them at par with me and stuff. But they've realized, right? I mean, Scott Bessent recently, in one of his interviews, he said that we can't do without China. I mean, they also agreed to that. So there's basically a, I won't call it a taco trade, but there's a realization that they can't do without China as such.
There's a tikka trade, not a taco trade. We're having tikkas right now.
But anyway, having said that, even China, by the way, was suffering along with us from, say, October till December middle, right? Money was flowing out from both the markets. It was only after DeepSeek came in, that's when the money started flowing to China. So it was not, I don't think it was money in the emerging market was shifting to China initially. It was fresh money coming from outside, which was AI focused money. And that's what drove China up. And frankly, I mean, after that, China has gone through the roof and we are down there. And that's what makes me more bullish, because today, our underperformance is close to 30% vis-a-vis the EM index, right? MSCI India vis-a-vis MSCI EM. This kind of underperformance I haven't seen in the last 30 years that I've been around in the markets. such a huge underperformance. I've never seen that, right? Obviously, there were reasons initially because we were very expensive in September of last year, as he mentioned, and after that you saw a huge correction, and obviously the valuation also corrected along the way. Obviously, the earnings didn't pick up, so there was a lot of chops in the earnings growth, also estimates and stuff like that. And today we are so bad that we are at 20 times forward earnings after you've seen a slew of cuts along the last 4 quarters. And that's why I believe that this quarter will be a turnaround for us in September itself, because this will be the first quarter when you close to high single digits kind of earnings growth, which you've never seen in the last 4 quarters. In fact, September of last year was a negative quarter, right? I'm sure the FI is also worried that they may lose a big rally in India given the huge underperformance, given the fact that the US Indian currency has depreciated so much.
So are you saying there is a FOMO trade as far as FIIs are concerned?
Initially,
which is
there'll
still
be
to play out.
Yeah, initially there'll be a FOMO trade, but after that it'll be a structural flow story as such. Now, giving you anecdotal evidence, we recently met up one of the FIs who's a big investor with us, and he started off in November last year, a new account with us. Today the account is $150 million.
Wow.
And he was negotiating for a further capacity in our fund of another $150 million. So they're that excited about it. I think they're feeling that we are being left out somewhere, and that's why they want to get in. Sorry, I'm so excited that I...
No,
my
but
phone
as long as
came
you're
blind.
excited about the markets, it's completely fine, right? So, okay, Trideep, now you, if indeed so I looked at the 291 companies that have come out with numbers thus far, right? The first few days. All 4 parameters, sales, margins, PAT and EPS are trading higher versus the last 5 quarters. So the start of the earnings season can't be faulted.
Correct.
If we do well for this earnings season relative to estimates, and if the commentary, which for example the management today in the EMS space or otherwise have cited that they do not have capacity to do, and the inventory was only 30 days, so they'll exhaust all of that, right? So if all of that were turn out to be true, would the markets rally on despite the fact the earnings picture has not improved as yet? The commentary is good, earnings are bottoming out, no improvement in sight as yet. Do you think the markets will still be up from where we are?
The answer would be yes.
The answer would be yes. Okay,
the
great.
markets always react or respond earlier, and then the numbers come through. So if you look at the numbers, it's like 4% top line growth last quarter, 7% top line growth this quarter. Last quarter, the top earnings growth was about 4%. This time it's about 8 or 9%. So net, we are basing out of our earnings in this quarter. Not cuts, but just basing out with the positive commentary. If you look at the bank's commentary, they are saying credit growth seems to be bottoming out.
Yeah.
So in Q3, Q4, if numbers do turn around and we do see a earnings downgrade cycle reversing, and mind you, it is still an if, but if it does, which I think the signs
Not a
are,
hypothesis, right?
then we would be back to, after almost 2 years of flattish earnings growth at Nifty levels, we'll finally see some earnings growth coming through, maybe about 10-13% in FY27. And that will take the markets to kind of where it should be, as opposed to languishing around the previous high levels, which has been there for the last 12 to 15 months.
Okay, so Teji and Teji. Now coming to the central figure, and whether there is Teji in your mind as well, Harsha. One, are you constructive? And two, I mean, you can argue that while GST is the latest impetus or stimulus, the genesis of this was laid in February or March when the RBI did what it did, right? Then the series of cuts that have happened, there is some talk, and now the latest RBL transaction shows that the RBI is now opening up to let foreign banks come in, stuff like that, and lending is the key reason for all sorts of growth, right? Do you think will be higher than where we are right now? I'm not asking for a Nifty prediction, but by and large, do you think will be higher? And would banks and BFSI lead that charge?
I would think so. Clearly, even if you look at last 12 months, banking and financial services to a large extent have outperformed a flattish market. And now we are seeing no more of NIM compression across banks. Asset quality issues, far and few. I would say it's not a system-wide issue. Maybe there are a couple of points which are there for certain individual banks, but otherwise, more or less, it's taken care of. You have credit growth, which is improving, and the expectations are that it will improve further. So yes, I think, and the sector has not been a great performer over the last 3-5 years. So to that extent, the valuations have also corrected quite nicely. So I would argue that probably banking and financial services would continue to outperform. They have been in the recent times, but it's not so visible given the fact that market itself has been flattish. But in a good market as well, they are likely to outperform is what I think. And overall, in terms of earnings trajectory, I think next 12 months or next 18 months should be better than what we have seen over the last 12 months. And that should be a big a positive trigger for the markets. And as markets recognize that recovery in earnings, we should start seeing better valuations even on the headline numbers.
I think
5 bulls on the table.
Niraj was being kind, and he said, "I'll not ask you for predictions, but I'm not going to be so kind." So, come on, we're having a Diwali party. No one's watching. Don't worry. No one will hear what you have to say. But let's hear your calendar year prediction from each of you. Harsha, I'll start with you.
See, if you look at valuations are more or less around average valuations. Not for the entire market, but at least for large and mid caps, I would say broadly around average valuations. And if there is a recovery in earnings, at least the market should move in line with that earnings growth. So low double digits is a possibility.
Where is the Nifty ending this calendar year at?
Low double digits from here on.
Okay, low double digits of growth from here on. Then, Shah, what about you?
Well, I tend to agree with him because I think the Nifty has not done much till now. You're talking about the current CY or you're talking about the next year's CY?
No, current this
CY.
calendar year. Yeah.
Well, then I'll
December 2025.
Okay,
Where are we
December
closing?
25. My feel is it should be somewhere in the high single digits, not low double, because that's like stretching it a bit.
No, I meant next 12 months.
No, I'm not talking about next
That's what I
12 months.
okay.
I'm talking about
It's a different question.
December 2025.
Yeah. So I get a feeling it'll be in the mid to high single digits kind of a growth. Given that the earnings growth is expected to pick up for the December. So as I said, September may not be that exciting because you lost 1.5 months
In the GST transition.
right? Everything got postponed. If, by the way, that hadn't happened, our estimates, that's what we had worked out earlier, were looking at something like your double-digit growth rates in the low double digits for the earnings. But because of this, we're talking about high single digits. And that's why I'm basing it purely on that.
Don't you have a compensatory effect? Yes, there is a transition pain point, but a compensatory effect should come in. At least if you're going by the anecdotal evidence that we're seeing right now, stores are full, what auto companies, for example, are reporting. Maybe you'll see that. We'll wait to hear what the FMCG majors say. Those results are not out yet. Wouldn't there be that kind of an effect that, yes, people held back purchases waiting for this to kick in because the announcements were fairly early, between 15th August and 22nd.
Yeah.
But then they would have made up for it.
But in 8 weeks, I mean, that's what I was talking to the retailers, the logistics chain and stuff like that. Just the last week, there wasn't enough goods available.
माल नहीं था बेचने के लिए.
Yeah, माल नहीं था बेचने के लिए. Literally that way. Thank you. And the fact was that I was talking to these truckers and logistics companies, and they said we don't have those kind of supply. I mean, the trucks and all to supply to these guys. We're so booked out as such. So I don't think that you will see again in this quarter. This is in the October to December quarter.
So maybe Q4 you might see that.
Q4 CY, Q4 is when you'll see the real growth. I'm talking about the October-December quarter.
Yeah.
My feeling is the December quarter you'll see earnings growth of mid-teens kinds kicking in as such. And especially given that December of last year, quarter of last year was a 3 or 4% growth rate quarter.
Yeah.
So that's why I think the bulk of the party will start, if you will, probably from next calendar year onwards.
Next calendar year onwards. That same question to you.
So I think first thing that I would say that next Samvat, I think India would be one of the global outperformers than the rest of the world. We are seen as in many ways the anti-AI trade. I think the AI trade has gone a fairly long way in one direction. I think sooner or later we will have a deal with United States, and as that happens, the India trade relative to the global would certainly work. Is the first thing that I would say. Second thing I would say is in terms of the next year, 12 to 18 months would be the year of the consumption. With public sector, pay revision and whatnot coming up, I think earnings in that side is looking undercooked, as I said, on the discretionary side. And all of these put together, I would say that, maybe kind of, low double digits is a way that I would kind of go with the...
for calendar year? For end of calendar year?
If you do invite us for Diwali lunch next time...
100%.
Yeah, then with that promise, certainly low double digits is what I would say.
No, even if the prediction is not correct, you'll be invited.
This prediction, then we'll call you for Diwali lunch every year. As long as the market gives double-digit returns.
So I think with regards to a few headwinds going about, particularly relative to the global trade. But there is one caveat which I do want to kind of point out, because we are in Diwali doesn't mean that we unequivocally turn out to be bullish. Which is that this whole tariff thing, which is kind of going on, fundamentally you can't justify any of this. It started around about February, March. We are now in October. And the sound bites are still to and fro. If this continues for another 3-6 months, then the global pain trade in the form of the real economic impact will also start to show about. It's not an India-specific issue, but overall, that is something on the other side which I think investors should be mindful about. It's something that today you can't build a portfolio out, but some protection from that standpoint, something to be careful about as a risk that I would say in the next 12 to 18 months.
So all domestic-facing businesses, do you think, is that hedge? Tariff gaya apni jagah par, and you have your domestic facing businesses. Is that something that should be in your mind as you plan for the next Samvat?
I think it may not necessarily be equities. It may be some other asset class where real assets might be kind of, REITs, some other assets where you might...
Not gold.
Or maybe gold as well, but it has gone up so much. Maybe we see a correction in there as well. But something to do with real assets is what I would kind of surmise would be a bit of protection that's also needed as we look at next 12 to 18 months.
Okay. Dinshaw, more equity now that we have consolidated, or are you in the camp which says maybe something else as well?
No. So I'm a total equity guy.
Total equity guy.
Total equity guy, and I believe that equity outperforms any form of other investment given a period of time. And if you ask me what is the period of time, I would say the amount of time needed by equities to outperform any other asset class. I'm joking about that. But the fact is that if India is going to grow its GDP at 6.5% the real terms, nominal terms will probably be at 10.5, 11% I think that's the kind of growth, and no asset class can give you that kind of growth going forward.
So because we have last 5 minutes on the show, we want to make it slightly shorter question, shorter answers. So Dinshaw, I'll start with you. Okay. Let's say 3 questions essentially. India versus China, the market to bet on next 12 months.
India.
Okay. Banks versus NBFCs for the next 12 months.
50-50. Today it'll be NBFCs, but later it'll be banks. So it's going to be one.
Tamanna is going to grill Harsha, but my next question to you is IT services versus tech-enabled players, the likes of, could be fintech, could be food tech, whatever. Platform companies.
Obviously the platform companies.
Next 12 months, after the underperformance.
Yes.
Platform companies.
IT companies are going to have a very rough period. I think they need a reset in the existing business model. I'd rather go with my platform companies.
And last question, gold versus Bitcoin.
That's out of the blue. So basically I think Bitcoin. Given that the US president is so keen on Bitcoin, not Bitcoin, but this thing. So
wow, that's a good one. Good one, Niraj. Okay, Asha, I thought we'll do something interesting since it's the...
Oh, you're not doing the rapid, then I'll do it with him.
No, so I have a different kind of rapid.
Okay, let's do that.
But he's already heard one round of questions, so we've throw a bit of a googly. So here I'm going to give you the name of a mithai and tell me the stock or sector or company that likens the most to it. So for example, Kaju Katli, top of the line, because we all receive gifts, maybe some you want to recycle, some you want to keep and actually eat. So if I take Kaju Katli, creme de la creme, top of the line, what is that stock, sector or space right now which resembles the Kaju Katli?
It's also more like all-weather, and for the next 12 months I would say banking sector.
Banking sector is the all-weather Kaju Katli. What about the jalebi? You don't know where it starts and where it ends.
IT services.
IT services. What about the Son Papdi? No one really wants it. You repack it and send it. Or maybe recyclable.
Maybe some other sector. I don't know. How will you describe Son Papdi?
Okay, you can save in recycling. Something which is evergreen and recycling. You can recycle.
Tough one.
Okay. Motichur Laddu.
Motichur Laddu. Maybe some other domestic businesses will be Motichur Laddu. Okay. They will still do better than probably IT services.
Let's think of something new for Trideep. Trideep, what about firecrackers? Let's see. What is your sparkle this time round? What is the sparkler?
Would be players on government capex, maybe defense, maybe railways. One of these could spring up positive surprises as the government takes a more active role, I think.
Okay. And what is your Sutli bomb?
Which is defined as low voltage explosion or something like that.
Yeah.
Low voltage explosion would probably be FMCG. It could certainly do a little better, but given that we are well penetrated as an economy, the range of outcomes could be limited.
Okay, and obviously the no-brainer in the end, which is the rocket. Rocket is the question everyone will get. So both of you have a second more to guess about.
Consumer discretionary stocks, and of course it's a wide basket. Within that you can choose your pick. And I'll let that remain with me. But consumer discretionary would have some segment which would be rocket, I think, over the next 12, 18 months.
Yeah, that's the rocket that doesn't go up and just burst, but actually gives out colors, right? Because that's what you want in the portfolio.
Good quality rocket.
Quality rocket.
Good quality rocket.
No, I don't think there will be too many rockets. I think we are just coming out of a consolidation, and it's not going to be a blockbuster kind of a market next year. Maybe there will be individual companies which will do extraordinarily well. But since I can't take individual stock names, I would say from a sectoral perspective, you may not see too much of a outperformance from one single sector.
Okay.
So here's my rocket. Obviously, I won't take any stock names, but when the FIs come in initially, they come in only into large cap, right? So large cap, there may be some diversified players which will work out because they are under penetrated, right? I mean, they're under holdings in the foreign funds. But the bigger move, I think, will happen in sectors which are new for the world, the platform company. But that's a differentiator that India has to offer to the world. And can you imagine a FI who's going to his US client and saying, look, I'm going to buy utility companies, I'm going to buy cement companies in India. He said, I have all these out here, right? Give me something new. Yeah. So you talk about the platform company, the fintech guys. And so I think that is the real game changer for India. That's the rocket, if you will.
Yeah.
And what could spoil this party? Could it be the trade deal not reached or something else?
So my feeling is the trade deal will be reached pretty shortly because we are both the Prime Minister and the President of US are talking good, right? So it's obvious that. So I think that will be a trigger which will be provided. So initial trigger will be the 25% penal duty which will go away probably by the end of this year if things go well. And next year onwards, you'll see that India is coming at par with the rest of the markets at 10-15% kind of duties. That's the dream scenario for us. So I don't think that those negatives are done and dusted.
Done and dusted.
Yeah. From here on, you can only see positive triggers coming.
Okay. So Trideep, you mentioned this, but that would be the party pooper.
I think
the trade.
a global currency adjustment could be a tough one to digest for the whole world. So I mean, if you look at dollar dominance, which has been there for a good while, it's kind of gradually sliding down. If it all snaps within a year, then we could have a situation to deal with. But otherwise, broadly, that's the area.
What is the, you said earlier in the conversation, India is the non-AI trade.
Anti-AI.
Or the anti-AI trade. I'm just wondering, is that a good thing or a bad thing? Are we now giving up on the AI story, a domestic AI story building up here, despite one of our largest IT companies trying to do exactly that? Harsha, your question to you, and then of course Sudeep.
See, I don't think, you just need to be an AI company to really do well in the market. If you are going to use that effectively, you can probably change your business model and get gains out of it, right? And many Indian companies, I'm sure, will do that. We may not be investing enough, but that's been the trend that we have seen for years in India. Whenever something really new comes up, we may not be the first ones to really go ahead and invest into some of those technologies, new businesses, etc. But I'm sure, given the kind of companies that we have had in India, nobody is going to sit and watch what AI is going to do. I'm sure every company would be investing a little bit in terms of trying to get AI in terms of support and enablement for their existing businesses. And I'm sure over a period of time, you will see efficiency gains coming out of AI, even for Indian companies.
No, my question being that for Indian investors, that means the AI exposure is not there unless you're investing in foreign shores.
In the near term, yes. But as Harsha pointed out, we are in many ways IT services are a bit like barbers versus the hairstyles. Whether it is cloud, whether it is AI, whether it's package implementation, many such styles have come and gone. But the barbers always had a job. So likewise, I think Indian IT services in the second phase of AI, I'm sure will find their days in the sun. So it's from the short-term perspective, which is why I said that it's seen as an anti-AI trade.
Actually, Dinshaw, if indeed the AI, whether it's a bubble or not debatable, but let's assume we call it that it's a theme that has run so well, starts to correct itself, could it actually be positive for the Indian IT services companies?
I'm very clear that the Jivon syndrome is going to kick in AI also. I mean, where you have more of commodities, the price of the commodity comes up. Frankly, I mean, AI has become a commodity now. It is. So that's why I believe that it's a matter of time. And I won't call it a positive for us, but I'm sure that because in US also.
No, I mean only for IT services. Not positive for us per se, but positive for IT services, because then people will...
Yeah, the IT services, I think their problem is the manpower pyramid rather than anything else. The whole thing was that the bottom of the pyramid was the one which was executing the deals which were set by the middle of the pyramid, and the top pyramid was only for relationships, right? That's how it was. And the bottom was very heavy and very lowly paid, right? And that's how they used to manage that pyramid, manpower costs and stuff like that, yeah? Now that bottom of the pyramid is becoming redundant with AI. Now that pyramid is starting to look like an egg, right? You need a middle heavy, which goes and executes offshore, gets the deals from outside and stuff like that. I think that reset has to happen for the industry to start prospering in the future.
Okay.
So wait for that reset and then probably we'll look at it after.
Okay, so time for reset, time for renewing, and that is really what Diwali is all about, right? A reset of hope and aspiration. Having said that, I must say we're culminating this festive season much better than we started off. It's looking more cheerful. The market is also coming soon, and of course, we're seeing that in our Diwali party as well. Thank you so much to all of you for joining us, and to all of our viewers, we wish you a very happy Diwali from the entire team here at NDTV Profit. Thank you for all your support.